Macy's just reported a double beat on earnings and revenue, but the profits actually fell. They had a lot of higher discounts. They also talked about digital sales. Digital sales were down year over year. And then you got Lowe's. That was a double beat. BJ's Wholesale, they beat on earnings, but they missed on revenue. And then Dick's Sporting's Good. That was a double miss on earnings and revenue. Your initial reaction and the numbers just crossing?
Right. So Lowe's is kind of interesting. It's actually doing a lot better at Home Depot this year. But Lowe's, you've seen so many things have changed for us. I mean, since 2020, the pandemic, we're not buying things, we're buying experiences, and that's probably a good thing. If you look at hotel bookings, airline bookings, you look at all these type of things, you say to yourself, wow, we really have changed, from the day of actually making all those decks and putting on pools and all those home improvements to stay home with the pandemic. Now we're out doing things. I think, Home Depot and Walmart are seeing some of that. As far as Macy's, the stock is down 26% year to date. As you mentioned, a double beat, but that double beat on lower expectations, I wouldn't go near that stock. I mean, look, if you're going to be in retail, you might as well be in the best. That's Walmart, who just reported better than expected numbers for online, not disappointing online sales like Macy's. Also, Walmart has this big thing called groceries. Again, nice thing to have when you have inflation around us. So, for those reasons, we wouldn't touch Macy's. In fact, we think Macy's is probably short to maybe $5 to $10 a share. So we're not so high on that. And this kind of tells us once again, margins are actually going down in this double beat. And at the same token, online sales are not sticking. And again, if you're going to go with the best retailer, that'd be Walmart.